So Warren Buffett says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And that's why I believe it's a golden opportunity for you and me to buy a world-class Canadian company which is down around 20% in the last 4 months and which also offers 6% dividend yield. And I personally love these sell-offs because once again Mr. Buffett says be fearful when others are greedy and greedy when others are fearful. And people are fearful about this company, so let's reveal the company. So the company I am talking about is a top-notch telecom companies of Canada, TELUS. But why I believe it's a good opportunity? Let me explain. So there are two simple rules which I personally follow to determine if I should invest in any stock which is down currently. And you can also use these two simple rules for any other company or stock. And those rules are: first, understand the reason and the mistakes of the company because of which the stock is down. And the second rule is anticipate if those mistakes can be fixed by that company in the future or not. So if we follow these same two rules for the TELUS, then the reason of the stock's poor performance is a sharp fall in profits in the second quarter of 2023 due to the higher operating costs. Quoting from the TELUS's financial report, net income in the quarter of $196 million was down 61%, and basic earnings per share EPS of $0.14 decreased by 59%. Now the reason of that decreased net income is because of, first, higher depreciation and amortization, second, higher interest rates for long-term debt, third, higher employee benefits expenses to reflect the higher restructuring costs. So in addition to the lower net income, their updated targets for year 2023 is down, which is also one of the major reasons market is negatively reacting on the stock. So as we can see that the operating revenues targets for 2023 is down from the original target of 11 to 14% to 9.5% to 11.5%. Adjusted EBITDA and free cash flow targets are also down from its original targets, as you can see. So now we know the answer to our first question of why the stock is down. So let's explore the answer to the second question of if the company could fix this issue or not. So the interest rates are high for now and it might stay high for some more time. So the financing cost would be high for the TELUS, which will affect their net income in the future as well. So that's not very much in the company's hand, but I believe that they will be able to handle it in the long run, if not short term. But to reduce their other operating costs, they will be reducing the 6,000 staff position, which will save them around $325 million annually, with which they can also support their dividend growth. So there were some positives for the company in the second quarter of 2023. So the company saw a customer growth of 293,000, revenue growth of 13%, and free cash flow increased by 36%. And I believe that this will continue to improve considering the Canadian government's goal of increasing the immigration, which will lead to the high levels of subscriber growth for all telecom companies, and TELUS will be one of them. So there is one more reason to believe that this opportunity is good, as there is an insider buying of the stock with a considerable stock increase indicates that the last quarter results are overreacted. Now let's talk about the dividends. As mentioned earlier, TELUS's dividend yield is north of 6% currently, which is good for the income investors. However, there are some concerns with the TELUS dividend because the dividend payout ratio is around 170%. So the dividend payout ratio is dividend paid out per share divided by earnings per share. So 170% dividend payout ratio means Thales is paying more in dividends than what it earns. But why they are paying out more than what they are earning? So one reason is that this is a capital intensive business which needs capital most of the time to expand their networks. Once they establish those networks, they can enjoy some good cash flows later in the future. But for that expansion, they need to attract some good investments, and that they can do by providing more dividend. But all in all, to fill in these financial needs, most telecom companies and also oil pipeline companies such as Enbridge rely on the external financing. It is likely that this will continue unless and until we see those sources dry up in future due to some global financial crisis. So I believe Thales is a good opportunity considering its revenue growth, customer growth, good dividend yield, insider buying, positioned to benefit from the higher immigration levels, and it's also a reliable company. So thank you very much for watching this video. If you like my content, please do like, share and subscribe. If you have any questions, feel free to ask me in the comment section. This video is just for an educational purposes, and please do not consider it as any recommendation.